afternoon, ladies and gentlemen. It's a post-lunch session, and I'm aware that the post-lunch sleepyhead must be kicking in, right? But we have an amazing line of speakers to keep you awake. I am Shubham Gupta, host of one of the finest conclave, the Finance Conclave, of one of the finest gathering, Samavesh 2024. SPJMR, established in 1981 in Mumbai, is a leading postgraduate management institute recognized by Financial Times Global Ranking as India's #1 business school. SPJMR is accredited by Association to Advanced Collegiate Schools of Business, AACSB, and Association of MBA, AMBA, UK. The institute aims to influence managerial practice and promote value-based growth for our students, for alumni, and society at large. The PGPM batch of 2024 at SPJMR is a diverse and accomplished group of 165 participants. The class has an average work experience of 5.3 years, with participants coming from diverse backgrounds and industries. This dynamic cohort is well equipped to drive innovation and leadership in the business world. Samavesh is a flagship business academia conclave organized by the PGPM program. This prestigious event serves as a strategic platform where influential business leaders, industry experts, thought leaders, and academics converse to discuss emerging business trends and collaborate on shaping the future of the industry. Now, what would be the most important if we as a nation wants to surpass the developed economies? In my opinion, the awareness and the confidence on finance products is most important, as this enables financial inclusion, which is the theme for this year of Finance Conclave, which is data for financial inclusion and innovation. It is particularly relevant in today's rapidly evolving financial landscape. Having spent 3 years as an employee in a public sector bank, I recognize the critical importance of financial inclusion and the role of innovation in driving growth. The financial services industry is undergoing a transformation fueled by the rise in data-driven platforms that have the potential to make financial services more accessible and inclusive. Without much further ado, maybe a huge round of applause for our keynote speaker. We have Mr. Neelesh Sarda. Compliance is one of the most important risk mitigation vertical of any financial operation. There is zero tolerance for non-compliance, and he is the Chief Compliance Officer of Aditya Birla Finance Limited for 19 years. He has been in the banking domain, primarily in the compliance department, corporate, retail, treasury, capital markets, KYC, AML, covering all products across Indian private sector banks and NBFCs. He spearheaded setting up of compliance vertical in Yes Bank, one of the biggest private banks in India. Kindly welcome him on stage with a huge round of applause.
Thanks, Shubham, and good afternoon, guys. This feels like, a launch of a iPhone next version. So Tim Cook, Steve Jobs, but I don't think so. You guys are so lucky. I think so this is more about compliance, risk, governance. That was a topic given to me. I think extremely topical in today's world, financial services. And I think since you guys come with some background, and I, in interaction with some of you, I heard you all have worked in banks and all of that. So it would be familiar. It is a kind of a technical, a dry subject, but I will try to make it as interesting as possible. What I'm going to do is, I've been given 30 minutes. What I'm going to do is, I'm going to maybe speak for 25 minutes. I'll rush towards the end. If someone can just keep time, maybe 5 minutes before my time, if you can tell me, I'll just kind of rush through. I'll keep the last 5 minutes for any questions, in case if you guys have any questions. So without any ado, let me get into the presentation that I have for you guys. What's this?
Caution. Caution. Yellow light.
What does it signify?
Caution. Caution.
Steady.
Caution.
So fair enough. I mean, let me not get too cultural or something like that, but we Indians, if you see this, some of us will speed and try to beat this. Someone will really slow down, so someone else from piche se come and bang us, or we are in that kind of corridor of uncertainty. But in financial services, this yellow light does mean what most of you guys have alluded to. Just tread with caution. If you think that something is going to become, kind of yellow, just slow down, take a step back, and just hold your ground instead of rushing forward and creating a nuisance or an accident. Now, this is my favorite slide, which I've been using for like, I think, many years now, whenever I do a presentation. It must be much more before your time, but does anyone know what this is? Anyone? A quick call, not the front row. Maybe y'all also. Some of y'all would have heard it in, we worked in common organizations, so I would have done this presentation, but थोड़ा पुराना है. Wow. Anyone?
Japan.
No.
Lehman Brothers.
No. So
Apologizing.
these two gentlemen, the gentleman on the left is Doug Peterson, a CEO of Citibank Japan, and the gentleman on the right is Chuck Prince, CEO of Citigroup. And what are they doing? They are bowing down to the Japanese regulator after compliance, risk, governance lapses in their most profitable business, which they have been doing for the last 100 years in Japan, and it was closed down. So when I say a picture is worth 1,000 words, if you all have worked in your previous organizations, the organizations that you all will work for in the financial services, just imagine your CEO, chairman doing this in front of either RBI, SEBI, insurance regulator, so be it. I mean, this is where the importance of compliance, risk, and governance comes into play. We know business, we know everything else, but business hasn't kept pace, and now's the time. And as I go into my slides, I will quickly just cover why this has now become important. And I was really happy to see that, this topic has been put up in this conclave, because whatever you all might do, this is going to be the cornerstone. I thought, while I live under a rock, to be very honest, I was just telling someone, technology is not my forte. I thought ChatGPT use karta hu, just to figure out, what is the definition of compliance, what is the definition of governance, what is the definition of risk. And this is what ChatGPT gave me. It told me compliance refers to acts of adhering to established guidelines, regulations, blah, 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 by governing bodies. Risk refers to the possibility, risk refers to the possibility of experiencing harm or loss due to a particular action, event, or situation. Governance refers to the system of rules, practices, processes used to manage an organization, country, or institution. Global things, but what binds them together is basically we are talking about established rules, processes, principles that are laid down which need to be followed. That's what basically compliance, risk, and governance means. What does the regulator say about compliance? This is the official definition of compliance risk. And there is one important part which I want to lay stress on and which often gets missed. But I'll read it out for you. The risk of legal or regulatory sanctions, material financial loss, or loss of reputation. Reputational risk is something that always gets kind of, people miss it. It's invisible. That is the reason why. You'll have credit risk where you lose money. You'll have operational risk where there are, problems while booking a transaction or so on and so forth. Reputational risk. And I'll show you some slides which actually allude to reputational risk. You take years, decades to build a reputation. But it requires maybe one complaint, one newspaper article, one headline, one penalty to drop that reputation. So, no, I'm good. Can everyone hear me or?
Yes, sir.
People at the back? Okay. Yeah, just keep it. Keep it here. Okay. So I was at reputational risk. I think the cornerstone of financial services reputational risk. I think nothing gets bigger than that. You will take care of monetary losses, but once a reputation is gone, I think it's a miss. And you all will have seen when I come to some of the the penalties that has been levied recently by the RBI or the SEBI or the IRDA. It's a big miss for the industry. How do I look at compliance? Now, what we spoke about, Chat GPT, the regulators on compliance or risk or governance, they cover the first part. The act of following the laws, rules, regulation. And that's what you guys would have also learned generally in this program, that the legality approach to compliance. What is written, what are the rules, what are the regulations, please follow that. I have expanded a little bit to put in the responsibility approach also, which is what? Integrity and ethical conduct. What is written, so you have to do. Don't have a choice. And people also, when I come to the definition of fintechs, which is the program today, the responsibility approach somewhere is missing there. So, but embracing broader standards of integrity and ethical conduct is also risk compliance and governance, the responsibility approach. The last, I've expanded it to the security approach also. There are processes, rules, SOPs, documents that the company lays down. You need to follow that also. So in summation, the legality, the responsibility, as well as the security approach is compliance, risk and governance. Again, I can give you all of this basically in a PPT, give you all this gyan, but at the end of the day, financial services is not rocket science. It is actually a very touchy-feely industry. Intuitively, whether you're doing right or wrong, it's all about doing the right thing. You will immediately come to know whether this transaction is correct for the client. Is it appropriate for the client? Is this process correct? Am I doing, and I will touch upon, since I'm just talking right now, you guys must read, and this topic is going to capture ground. It's called dark patterns. And I didn't know till about a month back when we were looking. I work for Bajaj Finance, so we have a lot of digital interface. We have a lot of digital products. And we actually saw this regulation, which is a Government of India regulation called dark patterns. And I was carrying 3-4 slides where I thought it was 30 minutes. But go Google dark patterns. It's all about sneaking in certain charges, auto takes, so on and so forth, which it's very interesting. And I think it is one of the finest regulations written by the government because it comes with examples. And those examples are literally what we do every day when we go onto Amazon, Flipkart, when we buy stuff on the net, where people rush, only 2 rooms left, only 2 products left, confusing language, you have missed out last time on a 10% discount, don't miss it this time. They just rush you, they confuse you. So read about it, slightly off the grid, but extremely important. It's going to gain center stage because of something which I will talk about. But let me stay on this. Compliance is about doing the right thing. Just stick to the ground, listen to your heart, do the right thing. There's no need to do anything else. Again, busy slide, but a few call-outs. Basically, what are we talking about? Fintechs, okay? So, everyone knows about banks, NBFCs. This is a new animal, okay? Financial services sector is a highly regulated and licensed sector. So, unlike you and me, tomorrow I can't put a board, Neelesh Bank Limited, Sarda Financial Services, अंधेरी में बाहर SPGen में खोल दिया, चलो आओ पैसे दो, account खोलो, I'll give you 20% rate of interest, I'll be put behind bars, okay? So, it's highly regulated, it's licensed. You need to be given a license saying that yes, आप बैंक खोल सकते हो, आप lend कर सकते हो, आप deposits ले सकते हो. I'm not talking about the money lenders and all of that. So, it's licensed. Fintechs are the new kids on the block in a traditional business. What is banking? Deposits लो, loan दो, collect करो, वापस loan दो, फिर collect करो, फिर करो. So it's very easy. Give money, take money. Now, obviously, fintechs wants to define it.
fintechs are intrinsically innovative but averse to regulation. They are highly prone to creative interpretation of regulations and laws. Is it written in the regulations? If it's not written, that means we can do. If it's written, can we read it the other way around? Something is written, but they haven't mentioned this word. I'll tell you very traditional. I've been in compliance for the last 24 years now. RBI typically uses words like banks should, banks shall, banks may. So I always keep on getting questions. You know, they've used words like should, may, shall. That means karna chahe to karna chahiye, right? I say, Baba, it means you should, you have to. You don't have a choice. Those shall, would, don't confuse me with English. Like Amitabh said, English is a very funny language. So it's very clear, you know, those are just basically jargons, colloquial English language. But RBI, I mean, the regulators are very, very clear when they mean something is to be done, needs to be done. So this is what fintechs are typically about. Tremendous growth in innovative products in a highly regulated sector. So obviously traditional banking has been for a very long time. Fintechs have tried to redefine it, and nothing wrong with it. I'll come to that. Well, I'm painting a very grey picture over here, but they've done good to the industry in that sense. Fintechs are all about customer experience. Turnaround times, frictionless process, but in the bargain they have forgot the basic tenets of banking. KYC, data privacy, confidentiality. So fintechs are all about how quickly you can consummate a transaction. 3 clicks, get a loan. 1 minute loan process. APIs, you do integrations with a lot of companies. So it's all about seamlessness. But what about transparency? Where is your data going? Today, I think, I don't know where my data is. I think the web world or the outside people know more about me than me myself. So it's like, it's really funny, scary, but, you know, sometimes we say, ke, forget about it. Kya ho jayega? You know, my data is all over the place. And we take it very casually, but that's what it is. So fintechs are all about customer experience, but I think you will see when I go ahead what they mean. So with new algorithms, data analytics, online funds transfer, transactions it's like 1 minute mein loan. Look at the industry. It's like proliferating. But that's good because we are getting into financial inclusion, where more people are coming into the organized space. They're taking more loans. Consumerization is increasing. At least now people can buy everything on credit. I mean, right and wrong, but first a person could not afford a mobile phone or an AC or a TV because he said, "Arey, 50,000, how can I give at one shot?" But now over 10 months, 5,000 rupees a month, no problem. And that's good. And that's what fintechs have brought to the table. And nothing wrong with that. It's just the method or the way they need to go about doing this. However, compliance, risk, governance processes didn't keep pace with the growth. So the inevitable push by the regulator. So the regulator, typically what it does not understand, it will stop. RBI is run by traditionalists. They like the regular banking, which I said, take deposits, give loan. When you talk about data privacy, confidentiality, frictionless process, paperless, they don't understand that. So they've come out now with lots of regulations. They said you follow digital lending guidelines. They were detailed. So again, you know, for those who are interested, you all should read the digital lending guidelines of the RBI. I'm sure in your course curriculum, you all would have read the DPDP Act also. Read that. Dark patterns is what I said. Read that. That is all in times to come. So if you all are going to stay in the financial service industry, this is going to be the mainstay. So regulators have basically said, just hold back. They've increased the cost of funds for fintechs, for NBFCs. They've increased the risk weights. You now need to put in more money into a business to lend, so on and so forth. So as an analogy, if you like the game of football, I'm just saying compliance, risk and governance should be much like the game of football, where there are forwards, midfielders, defenders. We have to keep the ball in play, okay? But ensure that the regulator as a goalkeeper is not engaged. You play the game, play by the rules, but don't get into the hair of the regulator. Because you will see, if you get into the hair of the regulator, he will stop it down. He will take decisions which are not rational and they will slow down the business. So you shouldn't do that. Why am I saying all of this? And why is this topic so relevant for you all in this conclave, compliance, risk, governance? Why now? Because of this. This is all in the last 1 year. RBI cracks down on Kotak Mahindra Bank, bars onboarding of new customers through online. They shut down Kotak Mahindra's 811 product program, which is their online mode of opening bank accounts. Can you imagine in today's world, कौन जाता है बैंक में फॉर्म भरेगा, साइन करेगा, देगा? How many of you have gone to a bank branch of late? I haven't gone in like many years. RBI bars Paytm Payments Bank. Effectively, the bank is shut down. RBI bars JM Financials from financing. They've shut down JM Financials loan against securities business, their main business. RBI imposes 1.45 crores penalty. Even Bajaj Finance's products were stopped online products were stopped for about 5 months last year. IIFL, gold loan business stopped. They've effectively shut the gold loan business down. That was 70% of their business. Edelweiss ARC, they've shut down that business. So this is where the reputational risk is what I think. So these are all splashed on the front pages of newspapers. Now when you see this, you will have a little bit at the back of your mind, yaar, boss, ye kya company kya kar rahi hai yaar? Sometimes we think that, let's make some money, let's do this transaction. It's not worth it. One transaction, one action by a person. Last time, Mahindra and Mahindra, it's not here. But while collecting, while it's alleged, but obviously the collection agent ran over a pregnant woman while collecting a tractor loan. RBI overnight shut the collections only. Now that is crazy. I mean, obviously that was trigger happy, but RBI doesn't understand it. They said, how can you do something like this? They didn't investigate. Imagine across the country collection stopped. Banking thrives on collection. If you don't collect money, you're in deep trouble. So this is what it is. What I was saying, today's regulatory landscape. Earlier you had a leeway, but I deal with it on a daily basis in my job. So I'll tell you exactly what I'm facing. Zero tolerance to regulatory non-adherence. RBI, SEBI, IRDA don't have patience at all. Rule लिखा है, करना है, नहीं किया है, या बंद करो, shape up or ship out. Stop it till I don't understand. So Kotak is gone now. For like 12, 18 months, they will now not get their license back to get online. Edelweiss, JM, IIFL के चप्पल घिस जाएंगे. RBI मिलेगा भी नहीं. They will not start their business. They'll not even meet them. Because they've rubbed RBI the wrong way. 2, 3 years. You all should read this press releases. Just remember, IIFL, JM, Paytm, read Kotak. Go to the RBI website, just Google and just see the press release. RBI is actually ranting. It's frustration. I've never seen in my 20 years, 25 years. ऐसा कभी लिखते हैं क्या? 2 line लिखते हैं, penalty, shutdown. They're exasperated. How much challenge? How much time to give you? We gave you 2 years. You all have not listened to us. So we don't have a choice. We are now shutting you down. ऐसा लिखा है. I mean, this is in public domain. I mean, after giving, and it's one of the most liberal regulators, to be very honest. They give a lot of chances. So zero tolerance is today's mantra at RBI and SEBI and IRDA. Increased instances of penalties. इतना penalties कभी levy नहीं करते थे. The Western world used to levy a lot of penalties. Exactly what I was trying to say. Regulators are trying to get a grip on digitization of financial services, which is going to be there. It's here to stay. Governing fintechs, paperless banking, payment ecosystems, all your UPIs and your IMPSs and fast tags and all of that. Digital lending, increased cyber frauds. They don't understand it. They're still trying to. I think the industry is way ahead than the regulator. They're still trying to get a grip. Increased focus on spirit of regulation. Right thing. What you've written, so you have to follow the letter of regulations. But what's the spirit? What does it actually mean? Follow that. This is the most important and the most dangerous. Good for us as consumers, but not good for the industry is this whole customer centricity is taking center stage. Fair practices. Do what is good for the customer. Even if it's not good for the company, like for example, they started something known as a key fact statement. You give for a loan, you give a welcome letter, you give a sanction letter, you do an agreement, you speak to the guy. Uppar se they want to give you a key fact statement. They've changed our entire digital process and it is like a summary of the entire form. But they say, nahi, KFS do. Then it's like, return all the documents to a customer after he gives the loan within 30 days. If you don't, then you pay 2,000 rupees a day as penalty. Penal charges, all of that. So it's like, this is RBI's, all the regulations over the last 1 year is on customer centricity. What is good for the customer, all their speeches and all will also talk about this language. So you have to be very careful now that everything is moving towards customer. So what should fintechs do? Fintechs must instill compliance, governance, risk as a belief. All the time, and I've been a part of the industry for a long time, always it was, cost of making money versus the cost of compliance. Saying that, I'm making in this transaction 5 crore rupees. RBI ke kya bolega? One letter, why did you do this? One penalty of 5 lakhs, 10 lakhs. But I still made 5 crores for the company. Not anymore. If you think it's a burden, there'll be a problem. There'll be a reputational risk. And now shutting down business is not worth it, right? I mean, you've set up the business and the regulator shut it down. Not worth it. And it's not the time now. If you're into financial services, keep your head down at least for the next 18-20 months till RBI cools off, it cleans up the industry. And to be honest, financial services industry is the backbone of a country. If you want to become a $5 trillion economy, you want to do well, the backbone is financial services. And you can't afford a financial services which is very lax. The regulators are lax. Companies can do anything. So in one sense, it's good. But yes, it creates a burden. But I think in the long run, it's good for the country and for the financial services sector. So you have to treat it as a belief. You have to own it. Make it a focal point in your business construct. Each time you're developing a product, you're putting in something new into the market, think about a customer, think about compliance, think about governance, think about risk. Is it good? Will it create harm in the market? Will it create, confusion in the regulator's mind? Be transparent. You have to put all of that and not what I said earlier, frictionless, dark patterns, just get it done, make money the wrong way. Don't do that. And these three have to become a part of culture. ऐसे नहीं आएगा Neelesh Sarda in a 50,000 man company saying, I stick with the board saying compliance, risk, governance every morning. नहीं होगा. People have to own it. Everyone, it has to become a part of the culture. So when you're sitting in a meeting, people say, has compliance looked at it? Have you looked at the regulations? Is it good for the customer? In fact, I've not carried a slide, but I think Amazon has a concept of an empty chair. In every meeting, they have an empty chair in the table, in the room. And that empty chair denotes the customer. As if the customer is sitting in the room. So when you're deliberating, that empty chair says, agar customer room mein hota, to kya bolta? So very interesting. The empty chair concept, same thing. It has to become a culture. What is culture? Culture is an implicit norms that guide behavior. And entity culture are the norms and behavior of individuals, groups, which determine the way in which they understand, act and react. Don't we use in our normal business, Tata Birla jaise hona chahiye? Ab ye Tata Birla jaise hona chahiye kahan se aaya? We always put trust. They won't do the wrong thing. We use that. Let me use an example. I mean, in banking industry, actually, to be very honest, all banks are the same. But why do we say HDFC Bank? Trustworthy. SBI, trustworthy. But to be honest, customer service sabka same hai. Everyone does the same thing. Okay, but still, it's culture. It has to be set at the top. It's very, you'll know it when you feel it. It's that way. It's not, you can't judge it. Culture, you need to have that culture in the organization. I'm running, time is short. Let me see how many, I think 2-3 slides more. Again, like I said, it's not upon just one person in the organization, 10 people in an organization, 100 people in an organization. It's a collective ownership, responsibility and accountability of everyone in the organization for compliance, risk and governance. The sales guy, the operations guy, the company secretary, the compliance head, risk head, the business guy, the branch manager, the guy sitting in the front office, all are responsible for these three. It's not my business, it's everyone's business. Again, we have to move from reactive to proactive. You know, we always, as compliance officer, I used to always enter the room after the shithead hits the ceiling. The horses are bolted. You know, gali khane ke liye, hey, compliance officer kahan hai? Where were you when this happened? Did you sign off? So the first bullet, you know, shaheed hona hai to, you know, gala kiska latkana hai, compliance officer. But I'm just saying, why that? अगर पहले ही बोल देते तो, you know, at least for whatever it's worth, we would have got into the reaction. So, but now it's happening. So the CRO, the Chief Risk Officer, Chief Compliance Officer, all the governance functions get together. It's a collective decision. So we are moving from reactive. Again, like I said, you know, it's not me talking to you guys. These are actual statements made by, you know, the Deputy Governor at RBI, which says, set the tone from the top. When leaders prioritize ethical behavior, compliance with laws and regulations, it permeates throughout the entire organization. Critical role of risk management, compliance, internal audit are the necessity for maintaining independence and effectiveness of a company. These are coming from speeches. Assurance functions like compliance, risk, and internal audit are vital for maintaining financial stability, regulatory compliance. Strong governance is essential. So you know, these are coming from the regulator themselves, that we are laying reliance now on the support functions. Pehle it was all about growth, profitability, capital, but now we want you to do the right thing. Please give due importance to the support functions, compliance, risk, governance. A bit of trivia, and it's unfortunate. Regulators think, they tell us, salary तुमको कंपनी से मिलती है पर तुम हमारे लिए काम करते हो. अभी ये क्या बात हुई है? It's like you get confused all the time. So nowadays in meetings, actually I sit on the regulator side. So the management sits here, the 4 or 5 RBI guys are sitting here, I sit on the other side. So you know, there's a joke saying that, हाँ ठीक है, तनख्वाह हमसे लेता है और काम उनके लिए करते हैं. So be it. But that's how it is. So the three of us, actually RBI treats us as independent, you know, arms of theirs. And we are the only 3 functions who have specific circulars for us. RBI must be having 500 circulars. There is 1 circular on the compliance function. There's 1 circular on internal audit. And there's 1 circular for the Chief Risk Officer. 3 circulars dedicated to us, which is scary. Business of trust. It's all about trust. There are 20,000 banks, but you will go and open an account with A bank, B bank, C bank. Why do you do that? It's a business of trust. We can't lose the trust. Whose trust do you want to keep? First of all, you need to keep the trust of the regulator. I said it's a regulated business. He loses trust in you, he'll pull the plug. Okay? You lose the trust of the investor, the last block, he'll pull money out of the company. You lose trust of your customer, he'll close his account or he'll go to another competitor. You lose the trust of the company, you lose your job. You lose the trust of your colleagues, you lose face. Lose the trust of your partners. So it's all about trust, nothing else. Simple, basic, reputational risk, trust, do the right thing. What I've told is, it actually looks like a Baba's session, actually. It's like a sermon. So, next time I'll wear Bhagwa. It's just coming to me right now. I'm ranting actually. So, okay. Cost of non-compliance is way more than the cost of compliance. It's a wake-up call. I think, I mean, we are in our sunset years of our career. You guys are going to start out. Yaad rakhna. Let me close by saying that compliance, risk and governance are no longer an option. It's not a hobby. करना चाहिए, नहीं करना चाहिए, अच्छा है, looks good, medal मिलेगा, badge of honor. It's not that. It's a must do. You guys will be jobless if the company doesn't do all of this. बंद हो जाएगा. एडेलवाइज वाले नौकरी ढूंढ रहे हैं, पेटीएम वाले का रोज का फोन आता है. Sad. But that's reality, right? Come on, you know, I mean. So yeah, thank you.
Hello. I want to thank Mr. Neelesh for his keynote address. The three key takeaways for the students from this amazing keynote presentation that I would like to bring to our attention is the mention of, first, an honest confession that finance is considered a dry subject, but I want to assure that your conversation tickled our brain and made the subject very interesting and engaging, especially the dark pattern guidelines, which was very interesting case of regulations. Second, trading carefully and responsibly as an idea, not just applicable to finance, but to life at large. That being aware of your surrounding is very prudent approach as the business landscape is evolving at a roadrunner pace and a careless wily coyote may not be able to catch up. Importance of compliance as the artificial intelligence will bring in new challenges to maintain the democracy and inclusion attempts to ensure that some sections are not thrown under the innovation bus. RBI is taking enormous actions to ensure compliance. The case studies of Kotak and IFL will enable us to widen our knowledge horizon. And even if you say that it sounds like a sermon, let me assure you that this is the only sermon which SPJMR would love to attend again and again and again. With that, it is my pleasure to introduce our panelists who will help us explore the intricacies of markets, investments, and future of finance. A huge round of applause for our panelists. Introducing first, we have Mr. Mainak Banerjee, Head Web Sales and Digital Partnership, Bajaj Allianz General Insurance. With nearly 2 decades of experience in general insurance industry at Bajaj Allianz, he held the position of National Head at HDFC Vertical, during which he led the vertical to a significant growth, establishing HDFC Bank as the largest vertical in the Bajaj Allianz. Using his emotional intelligence, his leadership skills, his mentoring skills, he has played a pivotal role in building successful teams. Mr. Aniket Bhanu, he is the Vice President NSE Clearing with National Stock Exchange of India. He has been with NSE since 2009. His areas of expertise are risk management, derivatives, regulation and policy. And he has been an instrumental in implementation of several market reforms in central counterparty clearing space of India. And as per my personal survey, the interesting thing is that Mr. Aniket, almost half of us are clients. Mr. Aditya Khandekar, Deputy Vice President at TransUnion Civil. His role involves working with financial institutions and senior management to help them devise strategies on cross-sell, risk, product penetration. He is an expert on credit underwriting, microfinance, digital payments, and financial inclusion. In the span of his 18 years of work experience, he has worked with many renowned organizations, and to name a few, ICICI Bank, Hindustan Unilever, and Aditya Birla Group. Mr. Nitin Mathur, he is the CEO of Tavaga. He is spearheading Tavaga, which is a goal-based robo-advisory platform investing in low-cost exchange-traded funds. Tavaga offers an innovative technology interface for investors through mobile application. He is a consumer research analyst with 12 years of sell-side experience covering developed and emerging markets. Print and electronic media approaches him for his analysis of Indian consumer segment, and he graces the knowledge seekers like us by participating in fintech forums like this in educational institutes. Mr. Nikhil Ratanpal. He's the product lead at PhonePe. He has a 15 years of experience in fintech and financial services, creating and optimizing for best-in-class payments experience as well as payments platform at PhonePe. He's spearheading development of an advanced online payment gateway focusing on innovation and scalability. His career is defined by strategic leadership, operational excellence, and a commitment to mentoring teams for success. Now let me introduce to you our panel moderator, Dr. Avinash Ghalke. He's a professor of finance with over 20 years of experience spanning industry and academia. In the industry, he was associated with equity research teams at Goldman Sachs, Lehman Brothers, and Nomura, bringing wealth of practical knowledge to his teaching and research. Dr. Ghalke holds a postgraduate Dr. Ghalke holds a postgraduate degree in management from XLRI and is a CFA charter holder. After earning his PhD from IIT Bombay, he transitioned into academia, where he has been passionately sharing his insights with students and professionals. I leave the stage for your discussion, sir.
Thank you, Shubham. So we have often heard this term that data is the new oil. But the idea is this oil greasing the economy the right way? And is it ensuring that everyone that is there in the economy is included? So the panel discussion that we have today, and we have lined up panelists from different areas. So we have one from wealth tech, we have someone from insurance, we have a kind of a quasi-regulator in the form of NSE. So we're going to look at different aspects and see the greasing of the economy in some sense. So the idea of data for financial inclusion and innovation is the panel discussion. So to begin with, what I would do is, if we get a comment from each one of them on this, is data really the new oil and how is it greasing? So maybe we can start with Mainak first and then this way.
So thank you again, Avinash. So data is the new oil. It is not very new for insurance. We have always depended on data to risk our customers, to risk our assets that we're insuring. So whatever segment we do, the risk was always done by historical data. Now, gradually, data is becoming more important in insurance, whereby we are not talking about pricing the risk correctly. We are also talking about how we can increase the propensity factor of a customer and try to understand him better so that we can try and give him more products that he needs. So from only risk pricing, it has moved to propensity and also how many products per customer you can sell. So from an insurance point of view, data is an oil. Yeah.
Yeah, I would echo that data has always been the oil for financial services and financial markets. Trading decisions or investment decisions have always been made based on data. But now we see that data is becoming more accessible. It is becoming more democratized. There is more rich sets of data available, having more real-time, low latency data. And other than the traditional financial data or market data, there is a lot of use of alternative data also, be it in trading and investment decisions, as well as other things like, even if you look at SEBI orders now, there is a lot of forensic analysis based on alternative data. So in the areas of investor protection and forensic analysis, enforcement, investigations, as well as things like risk management, we are looking at more and more uses of data, which again goes along with tremendous increase in the computational capabilities that we have seen because of the new technology.
Good afternoon. So I think let's look at the similarities. Data being the new oil, data and oil. So oil by itself is not the valuable piece. It is when oil gets refined wherein the value is created. I think it's the same thing with data as well. Data by itself is available everywhere. It is data analytics, and in the current age, like Neelesh also touched upon, protection of data. That is going to be the new oil. Analytics of that data, it's going to be the new oil. Provenance of data. Where the data has come from, will start becoming as important, or is already as important as to know how to refine the data. So while data has been used in various ways, all of these aspects will start becoming more and more important to ensure that it stays as the oil and the value.
I think there are two aspects of data that we are leveraging. One is, of course, the historical one, some market insight, what are the prices and everything we get. Sorry. Yeah, so one is the market insights and the market data that we fetch from data providers. So that is historical analysis. And as Aditya just mentioned that, how do you refine that? So some of our algorithms actually use that data. We apply our judgment. We apply some stress tests, some rebalancing, some risk assertions and everything in terms of all the data to give financial advice. So yes, of course, we can't imagine what we do without the right amount of data coming in. Otherwise, it would be garbage in, garbage out for us, in terms of the way we are doing our analysis. The second aspect is actually very important, and this is something which is coming from the customer-centric perspective. We at Tavaga are running something like a goal-based investment advisory. It's not gold, it's goal, GOAL. So users are setting up their financial goals, and depending on them, we are actually giving them investment advice. So what it means by that is there's an intention of every customer of how he or she is looking at their financial goals. And with that respective financial goals, what is exactly, the advice or the way we want to give any recommendation to that user to, make investments and so on. So that data, I can't imagine what we are doing without that data either, if we don't have forward-looking, intention-based, data from the user. Our advice would be actually, probably not even 5% worth of, what we are giving right now. So is data the new oil? I guess answer is yes, without getting in what oil does and everything. But yeah, definitely for us.
So from a payments ecosystem perspective, if you look at the exit FY24 numbers just on UPI, right? 131 billion transactions, 200 trillion rupees. Just on UPI, right? Let's take credit card, another 18 trillion odd rupees, if I remember my numbers correctly. I'm not even talking about the other modes of payment. So that's a lot of data. That's large swathes of data coming from a lot of people in this country who've adopted different payment apps, at least in my domain, but a bunch of other fintech products that are out there, right? But like my colleagues called out here, data is fundamentally one of the ingredients, right? It's fundamentally a building block. You build you have your DPI, which is a regulator, central infrastructure that's been built in this country. And then you have the new age players, the fintechs, etc., that come in and leverage all of this, right? So in a sense, if I look at it, oil does get me from my house to Bangalore airport in a car. Does take me from Bangalore airport to Bombay airport via Jetline Fuel ATF, as we call it. So in that sense, data most definitely drives a lot of the financial transactions in this country by hyper-personalization, customizing experiences, customer-centric approach, something that we discussed as well. So in that sense, most definitely, data is definitely the oil from our perspective.
Right. So it's no surprise that it's oil for each of the domains that you talked of, right? But the idea was to get your perspective from each one of you. So the way we have kind of decided to go ahead with the discussion is I have tried to get themes, right? So let's begin with themes around data analytics and financial services. And let me begin with you, Aditya, because I think in our discussions prior to this, I guess almost everyone was wanting to get information from you in terms of how alternative data is used for getting the credit rating of people. And I'm sure a few of us queried you that I had this specific problem. Why is it that my credit score went down, right? So if you could share some perspective in terms of how is this alternate data being used for credit scoring and so on.
Okay, thanks. So, if I look at financial institutions as such and the usage of alternate data, and further I'll bifurcate the financial institutions into lending and deposit institutions, the market linked institutions, and insurance and others. So I'll just touch upon all of these. If you look at deposit taking institutions and lending institutions, if I'm looking at banks by itself, they are looking at a lot of alternate data, and I'm using the word looking at specifically because they are wanting to look at it. They are trying to see if there is merit in looking at it. As far as actual underwriting is concerned, at least the banks are still wary of using alternate data. Also, there is quite a bit of a thin line between what we will call as traditional data and alternate data. So, for example, GST, the non-consented GST data was also being referred to as alternate data until now. Now, there's a lot of correlation, and also it's very intuitive as to an entity which is filing its GST on time will also be making its payments on time. So while it is intuitive, there is a lot of correlation established over there. So data points like these have started getting included in banks' scorecards or as additional overlays and so on. At the same time, there are also a lot of fintechs and some banks who have also worked or co-worked on social media score or things like e-commerce payment scores. All of this has been there. There are entities working on it. If you look at it from an underwriting perspective, banks have not really used that in that sense because data which is backed by a lot of credit and payments has been time tested. Rank orders, it is very difficult to get a social media score to rank order. In a big country like ours, especially, the population is huge. Say a big bank will have anywhere thousands of branches. You need to have a defined process. Above the score you lend, below the score you cannot lend, or they have their own internal app scores. So if the social media score or some other score, say a e-commerce score, doesn't rank order, it is difficult to pass on that information at a branch level as well. So especially in a country like ours, that aspect matters quite a bit. Some aspect of social media scores are being used in the Western world for lending purposes in some manner. Fintechs are trying it over here. But just to draw out also from Neelesh speech earlier on, banks like to keep the underwriting process as boring as possible. They want to keep it based on things that have got time tested. So one of the fintechs came up with a fabulous set of scores, and I was a part of that discussion along with the CEO of one bank, and the CEO said, have you tested this data for the 2008 crisis? Have you tested this data for 2016 demonetization? During COVID, has this whole thing got time tested? The answer is no. Theoretically, it could have been, but in reality is no. So it is still too early to talk about alternate data becoming a part of underwriting in any manner, or even for deposit scores as well. So yeah, at the same time, there are some other alternate data points that have started getting used in some way or other. For example, location tracking has become almost mainstream. It is, you could consider it as traditional data or alternate data, whichever ways, but it has been started getting used in a very big way. satellite data is getting used in a very big way for agriculture lending. Distance from a mandi, or say what is the rainfall that happened in that particular geography, more than that particular geography, after a particular set of rainfall in that particular geography, did the production of crop increase in that geography? All of these data points are getting considered in a big way. Earlier as well they were, but earlier a lot of these data points are manual. Now with digitization, we have a lot of these data points coming in, which are being considered and considered in the final processes of sanctions.
Great. So in fact, slightly shifting tracks to Nikhil, and since you come from the business side of things, and you get a lot of information on business. So looking at the financial inclusion aspect, how do you use, let's say, merchant data when transactions happen with the QR code scanning? I'm sure a lot of merchant data is there. So would that be more like an alternative data, or that is something you still take as traditional data and you process it in your way?
Yeah, so in my personal opinion, I think not just us, but payments ecosystem, right? There are two sets of merchants, if I look at it that way. One which already has access to formal credit in some form or fashion, right? But there are also NTCs, as we call them, new to business customers, who fundamentally have been frozen out of the formal structure due to some reason or the other, right? What ends up happening is, because we have transaction data in some form or fashion on them, what the payment ecosystem providers can actually do is take these large swathes of data, run a bunch of AI models on them, and generate some sort of patterns to come out and say, hey, the traditional lenders, NBFCs, etc., hey, look at these players, look at the construct and the payment behavior, invoicing behavior, etc. The financial footprint of this particular merchant is similar to anybody else that you would probably be already lending to. And I think that's the value that the payment ecosystem players can create, in my personal opinion, to expand the trust or trust or provide a fillip to the whole financial inclusion process. And that just does not include credit, right? You can also offer different financial services as well, right? Investment services, you can bring about insurance services. Kisan, for example, the example that Aditya gave, right? A bunch of those things. So I think this area is very ripe for all the new age players to actually play in and actually bring a lot of these people who've been left out of the formal credit system into the fold. By using data very well.
Right. So let me move to Aniket. Right, as I said in the beginning, that you are more the regulator kind of a view that we want you to give us. Right. So even though we have talked of reliance on data and so many things, but I'm sure there are some risks that are lurking. So how do we ensure that these risks are mitigated in some sense? So maybe from your domain, if you could give us some insights.
Sure. So I see that there are four key risks that come from use of data and models. I would call them procyclicality of models, crowding of models, and bias and complexity that the new models are bringing in. So if I talk about procyclicality, it's the fact that the model is going to measure some economic variables, but the decisions made by the models are also going to give some sort of feedback to the economic variables. So I recently published a paper about CCP's margin calls. So if the way that we make margin calls is highly sensitive to market conditions, once we start making margin calls, people have to in distress exit positions, and that's going to increase the volatility further. So while such concerns may not be so prominent in individual trader behavior, but if we look at large organizations, be it banking or brokerages or market infrastructure institutions, the way that their models are constructed and the decisions that these models will take will feed back into the system, and it might worsen, it might result in an adverse feedback loop that might worsen the situation. So instead of taking a corrective action, it might make things worse. The other point that I wanted to make was on crowding of models. So I think it's very useful to remember that all models are wrong, but some models are useful. So if I think if we have a situation where many entities are using the similar or same kind of models, when the model goes wrong, everybody is going to go wrong. So I think in 2008 Gaussian copula got a very bad name. But yeah, I guess that's another risk, that all entities kind of using similar kind of models. With the AI ML models coming up, we have to also think about ethical considerations and inherent bias that might come in case of, for example, like I don't pick up calls from a certain STD number because I know that they are going to sell investment advice.
731 and 532.
So, but that kind of, particularly when we use alternate data, it will be very important to make sure that ethical considerations are taken in place and people are not excluded from access to financial services because of some arbitrary this. And yeah, I think finally complexity of AI ML models and their interpretability will be crucial. So to kind of address all these risks, I guess somewhere human intelligence must be used, other than the things like my colleague said about model stress testing, model validation, regular monitoring and updates, etc.
So let me move to you, Nitin. In terms of coming back to the growth side of things, so since you talked of WealthTech, Tavaga being a WealthTech platform, the idea is, as I remember talking to you, you mentioned the idea is how do you ensure that even the smallest of the guys can take services which the large HNIs are able to take. So from a financial inclusion point of view, how do you see data analytics really driving this growth? How is it helping us there?
Sorry, repeat the question, please. Yeah, just repeat
Okay.
it again.
So from the point of view of data analytics being used for ensuring that WealthTech reaches the unbanked and
Sure.
everyone.
No, a slightly longer answer. So, and I'll give you a background. I mean, Professor Ghalke and I, we go a long way. We started our equity research career way back in Lehman Brothers. We were not responsible for the fall, actually. But we learned some tricks of the trade there, in terms of how data is analyzed, how financial models are built, how forecasts are built on spreadsheets and everything. Whether company achieves that or not, it's a different ball game altogether. But that was our sort of 101s, very young in our career, not so reckless as us, but yeah, definitely. Having said that, right, one of the things, and of course coming to topic, and it's a slightly longer answer, so please bear with me. The way the value chain is engineered right now in financial services industry is that the rich are getting richer. The people who don't need the services, they are getting over-serviced, while people who need the service, they are left out of the financial inclusion space per se. Now, what do I mean in terms of investment advisory and the value chain that I'm referring to? Like, as an equity research analyst, my mandate was actually not to talk to funds which were less than $500 million of assets under management, which means like I'm doing all the hard work of building financial models and trying to, come up to some forecast, valuing the companies on discounted cash flow methodologies and everything, speaking to industry experts, forming my own opinion, but never ever pick up a call for any fund who's less than $500 million of assets under management, which means there was an exclusive club of, people who had access to all my hard work, all my insights and everything, that they mean, and they used to pay me in turn and everything, my firm, of course, and then to me in turn, right? So what happens there, right? People who need the information, who need the analysis, they get knocked out completely. So what we've done, and this is why my eureka moment at Tavaga was that, yeah, ye bahut brilliant hai, you can buy multiple houses in Bombay, you can do whatever in your career, but is that your bigger goal in life? Is this what you're born for, or would you like to spend the next decade or so of your life, achieving this whole objective of, people who don't really need your services, or, just help the rich getting richer, or, just around that. So what we did, and the financial inclusion is one term that Professor Ghalke is using again and again, right? What we did that, can we use those insights? Can we use those skills that we developed and go directly to retail? Now, what it does, essentially, we backtested data for 20 years of existence. Where there was no data, we used proxy indices and everything to stress test our data. Aditya mentioned about financial crisis and backtesting during those black swan events. So we actually went back to 2004 onwards. There were years of good monsoon, bad monsoon, financial crisis, elections, bad elections, hung government, whatever. During all that era, we sort of backtested and we built up an algorithm. Now, some of this is done by analysis done by all the investment banks, that you would consider. All your Deutsche Banks, Credit Suisse, Lehman Brothers of the world, they actually do that. They advise global pension funds for asset allocation models. So we built up those things in-house. We said, okay, let's build our own IP around that data and everything. Thanks to fintech, we actually democratized the whole system completely. We said, okay, here you go. It's available to retail now. You pay us for our advisory service, 600 rupees per customer per annum. We've not increased any pricing around that for last 5 years now. We say that, okay, and in that you set up multiple goals, you keep going around whatever you do, and we take care of every analysis and every investment decision, which comes out of the data straight away. So what it means from financial inclusion perspective is also that you have somebody who's making an SIP of literally 500 rupees per month. So he or she is getting the same quality advice which anybody who's doing 50,000 rupees or maybe 1 lakh plus rupees per month. And that's our sort of commitment for financial inclusion, for data, to be actually democratized and given to the end users in a manner which is, very financially qualified, a bunch of individuals who have actually curated that data and the analysis and the output there. So slightly longer answer, but I hope I answered what you sort of were looking for.
Yes, thank you. Thank you, Nitin. So finally, I come to you, Mainak. As in, you have been patiently waiting for this. So let me start the second.
Really listening.
Yeah. So let me start the second theme around products and services which are driven by data. So especially in the underwriting process, and as you mentioned, data is not the new oil. It is always there for insurance. So, but with this new fintech and other processes coming in, the way data has been looked at is different now. So how has this helped insurance kind of improve its products? Or let's say at Bajaj, what kind of innovations have happened because of these new things that are coming up now?
Yeah. So, in an insurance industry, data was always the oil it was thriving on. But initially, whatever risk analysis was done on the asset. So we are a general insurance company. We cover everything which is not life. So if you have to cover a motor insurance, for example, a car insurance, so historical data would tell us which make model was good in terms of what would be the propensity of claim, which geography is good, whether petrol and diesel, we know diesel is driven more, so diesel is a worse risk than a petrol. So likewise, on the basis of the asset, the segmentation was getting done. With a lot of analytics and data coming into the play, now the insurance industries are trying to merge the customer data with the asset data. So till historically, we were only depending on the asset data, whether it is a factory. So if it's a factory of cotton, it will be higher risk than a factory of metal, for example. So now from only the asset per se, we are looking at customer level risk. So if a customer, and we have done some work with CIBIL also, where we ran our data of the last 5 years, and we tried to see that, between different CIBIL score category wise, what is the loss ratio of customers in, say, a motor insurance or a health insurance. And we have realized, and the data has come out very, very strongly, that people with a higher CIBIL score have a better loss ratio, which means that people with a better CIBIL score, I can actually give a better discount because I want those customers. At the end of the day, insurance is about pooling in of risk. 100 people are giving premium, 5 people will claim. You want to see that how much of more 100 you take so that 4 people claim or 3 people claim. It's all about segmentation. So if I can know that this customer is good or better for me, I can try to give a more discount to him to get him on board. And that is what data is doing today. From asset level, it's come to customer level. And from customer level, and not just restricting to the same asset, we are trying to say that yes, if Aditya is married and he has 2 children and he has a motor insurance with us, should I not also ask him about a health insurance or a personal accident insurance? So the data that we are collecting, and we are running some bureau scrub, and we are trying to do a lot of analytics work on it. And because Bajaj Allianz is a 21-year-old company and we are the 3rd largest company, historically we have acquired 14 crore customers. Now it's all about how you map and manage the data in a way that which customers have a motor insurance with you but not a health, but he has a family, which means that there is a requirement of health. So a lot of propensity model is getting done now, which is going to aid in cross-sell and upsell. So the data, which is only for risk, now is going to be helping us to increase our business. Now, when you ask about innovations that Bajaj Allianz has done, very proud to say that we are the 3rd largest general insurance player in the industry, and we have over 7% market share, and we are the most profitable one. So when you have to be profitable, you need to segment your customers better, and that is what we have been doing with data. And to stay ahead of the industry, you have to keep innovating. And Bajaj Allianz as a company, I think, from a product perspective, today we talk about pet insurance. We were the first company to introduce pet insurance in India. Today we talk about cyber as a risk. We are the first insurance company to introduce cyber insurance in India. Neelesh belongs to BFL. Consumer durable loan did a huge success. We were the first insurance company to do extended warranty with a consumer durable loan. So from a product perspective, you have to continuously innovate. From a process perspective, we were the first company to introduce health administration team, TPA. Like when you go to a hospital, there is a hospital TPA department which interacts with the TPA. So earlier, historically, there were a 3rd-party TPA. So there was a TPA, there was an insurance company, there was a customer. And there were a lot of confusion between the 3. So Bajaj Allianz as a company, we introduced TPA first, and now every other company has it. We were the first company to launch telematics, IoT and motor. So likewise, a lot of innovations we have done as a company which helps us stay ahead of the curve. And data, is something that helps us segment our customers better and lets us price the right risk to the right customer.
So that also explains why we have more calls coming from Bajaj and similar ones, right? Right. So drawing upon something which Neelesh had mentioned about how creatively fintechs interpret the regulation, right? So something similar that we had some time back was on BNPL, right? So Nikhil, to you. So now that the BNPL or the digital lending regulations have been modified to an extent, so in light of that, how has consumer lending changed or likely to change in the coming days?
So, in my personal opinion, if you look at BNPL, right, it's expected to solve the problem of at the point of checkout, where the customer lands, may have high intent to purchase the item, but due to whatever financial reasons, when they reach the checkout point, they decide, okay, maybe not. And when they're dithering, that's when BNPL is supposed to push them over the ledge and actually convert the order, right? And if you look at it, it's an important, especially from an SME merchant standpoint, because they are the ones who are trying to drive more orders, more demand generation, etc. And this is one of the tools that helps them during the transaction journey at the point of checkout, right? Now, for absolutely valid reasons, the regulator has come out with certain guidelines on how this needs to be done as well, right? So if I look at it personally, I do expect BNPL players to get a lot more in line, of course, with what the regulator has called out, and that will see them aligning to a banking or an NBFC entity, of course, which is one of the things that they have. But you'll also have certain more traditional aspects come in. For example, the lending agreements will now become more well-defined for them to be extremely compliant with the regulator. That's certainly one thing that I expect. From a consumer protection standpoint, if I may look at it that way, I think dispute resolution mechanisms, which were personally, I feel slightly vague. I think they'll get far more well-defined, where the BNPL player will have to deal with issues coming in from the individual customer at that particular point in time. A lot of transparency is expected to come in as well. upfront disclosure of what the charges are, interest rate, etc., things like that. Of course, and also this means that organically, as a result, there's going to be reduced predatory pricing. The aggressive collection practices probably are expected to go down, etc. Things like that, right? I believe what will also happen is a lot of these BNPL players are now expected to funnel a lot of the data to the credit bureaus as well. In that respect, right? So I think that is something that's going to also happen, which I think will also translate into these entities maintaining a lot of advanced risk assessment and fraud detection toolings as well. Right? Customer centricity, of course, is the key focus. But I think given the overlay from a regulator standpoint, I do see some of these changes coming in to some of the large players. Especially given one of the largest players faced, what they faced in the last few years as well. So definitely, I think it's a metamorphosis, quite frankly, an inflection point, if I may put it that way, for the BNPL players. I personally do believe that BNPL players still can add a lot of value from an SME merchant standpoint, in particular, when closing out those e-commerce transactions. I think only time will tell how it plays out.
Okay. Nikhil mentioned about trade rating agencies or accessible. So let me come to you in terms of, as I see it, you are not the one who is facing customer directly in terms of any product or whatever. But as, let's say, a third party, how do you see these data-driven models actually impacting product launches that are happening in the industry as a slightly outsider?
Data from both the bureau as well as alternate data is getting analyzed in a very big way for product launches, relaunches, and just taking a cue from what Nitin mentioned. It is the smaller organization probably who are benefiting much more from this, while the larger organizations are much more up the curve in terms of data usage. They're much more data mature in that sense. They have been using it for a while, and they've got their models in place, so on and so forth. But at the same time, it's also that the larger organizations have slightly higher budgets. They have the liberty of testing out things in the market even prior to a launch in a small way. They have budgets for it. Now, consider this for a smaller organization, their GDP. So a lot of these things are also coming into play. There are also things like which is the movie that is especially for consumer durable products lending and consumer lending, which is the movie that worked well in a particular pin code. That is also coming into play for financial product sales, for regular FMCG, of course. So all of these things are coming as data points into product launches. In addition to the entire bureau data. So it is more about how data mature the organization has become, how well they are able to fine tune their testings before a product launch. So just one more example, just for interest's sake. I worked with Unilever earlier. One of the things that we would map as far as sales within the city is concerned is which pin code has how many dog food selling shops. Okay, so if it is dog food, a larger number of dog food sellers in that particular pin code, that would indicate a certain affluence in that pin code. So while we used to take all the other data points into consideration, these aspects also get looked into. And as we are growing as an economy, as data is becoming mainstream, all of these data points are getting picked by different types of organizations for their launches, retooling of those launches, and so on.
So as Aditya was mentioning those various correlations that they saw, the professor inside me thought I should give the caveat that correlation is not causation. So just remember that.
Thanks for that.
Right. So Nitin, over to you. In terms of, you talked about the democratization of data or services for unbanked, but I'm sure despite whatever good things you have talked about, there are still some challenges, right? So in terms of those challenges, what do you see some of those challenges that you foresee? As in, you may have overcome them or not, I don't know at this point, but what are some of the challenges you see?
I think one of it's just forward-looking data that we are focusing more on, and the user intent, so how they are planning their financial goal. So something which is to be understood by the end user when they are doing their financial planning, that they have to keep their financial goals in mind, realistic goals, that they set up and everything. So not from the industry perspective, but probably just to educate the end user that whenever you're doing a financial planning, so our challenge is actually to sell a financial planning product rather than like make great returns in 30 days sort of a product, right? So we are selling literally financial planning and, asking and pushing users to think a little bit deeper on, what their financial goals are. So that's our challenge, literally, to be honest, because somewhere the industry leapfrogged many sort of, milestones, and thanks to pandemic and all the financial gurus that we see on Instagrams and YouTubes, that make money in 30 days, or I'll make you rich. I'll make you read these lines, trend lines, and you'll become rich, and you don't do anything. Unfortunately, that's not the way financial planning works at all. So we are fighting multiple battles there with the regulators, with the sort of, industry experts and so-called experts and misnomers which exist in the industry, to do our two bits to educate the customer that financial planning is very different ball game than, sort of anything else that you can think of. So our challenge is to just sell that, futuristic financial planning, to push that. Somewhere it's like a non-charming sort of an option for users. कि यार ये तो बहुत conservative है. And we're like, yeah, they're बहुत conservative hai, but that's the name of the game. You need to be, sort of really focus hard on your financial goals, and to tell the end user that you're not competent, right? So that's what we are doing in many aspects as well, that all these Fibonacci series and all those funky words that you like listen on YouTube and others, this is not meant to give you anything, At the end, the data is something which you're delivering for yourself, you're thinking about yourself in terms of your financial planning and future goals.
So essentially, you are saying you're not posting those P&L snapshots.
No, we are not, definitely.
Right. So moving to the third theme around inclusion and regulation. So Mainak, let me begin with you again. So something around, so maybe more a clarification kind of a question. So when you talk of digital channels, so each company has its own website, apps or whatever. But we also have these aggregator platforms, and most of our insurance, we see a lot of these. So would that also be a digital platform for you, or how does it work? And how do you regulate them, let's say from your end?
Yeah, so when we talk about digital channels, I think insurance has some catching up to do. I think like we see in airlines, like we see in ticketing, the entire distribution has moved to digital. However, that catching up is happening in insurance. Now, I had web sales and digital partnership in Bajaj Allianz. So when we talk about digital distribution, three things come to your mind. One is, which is the digital asset of the company, which is typically your website and your app. So whatever business is happening through the website, your app, that is a direct D2C, and it's digital. So it's a no-brainer. However, there is a lot of aggregator partnership which are coming up. So that's the second way of digital distribution. Nikhil comes from PhonePe. They are a big insurance aggregator today. We see Policy Bazaar, and there are a few more. So when customers want a choice, they may come to these digital aggregator platforms, and they may want to choose between different insurance companies, different pricing, different coverage, so on and so forth. So that becomes the second digital distribution. The third digital distribution, which is also gaining prominence and which will become very, very big, in days to come, and I think all the students, if you come to insurance, and digital will be an option for you, that is the embedded insurance. So you go to a Flipkart, you buy a phone, along with the phone, you're taking a accident protection cover of the phone. You go and buy a specs from Lenskart, you get a specs insurance. So embedded insurance is gaining prominence quite a bit. As an insurance company, as a head of digital business, I have to ensure that I'm present in all the three channels. For me to actually be digital, I have to be there in my own website and app, and I have to make it, the best journeys, the best experience. And I know there are customers who will come to me looking for me. So people can go to Google saying that Bajaj Allianz car insurance, and Google will, obviously sponsor or organically send the customer to me. I also have to be there in the aggregator platform because the customers today are moving different places. So if I'm not there in the aggregator platforms, I may just miss out. It's important to be there because today the aggregator platforms, and if I take example of Policy Bazaar or PhonePe, they are extensively innovating in the journeys. They're spending a lot of money to create awareness in insurance. Insurance is, as you know, still a push product more than a pull. So I need to be there present. And thirdly, with a lot of fintechs who are opening up and crazily acquiring customers, it's important that I have some insurance which relates to the primary product that they're distributing. If you're selling a loan, I can cover a loan protect. So it's important for me to be present with those fintech companies, with those e-commerce companies, and have my insurance product so that at the end of the day, I can reach customers and I can, penetrate insurance. Insurance today is still highly under-penetrated in India, which is, 1% of GDP. And if you have to compare it with China, it's 4%, USA 11%, Africa, Middle East 8%. So people who are sitting in this room and you want to choose insurance as a profession, there's a huge leg room for all of you. It has been growing very well over the last few years and it will continue to grow because the penetration is low. And from a digital perspective, which is going to be the future, it's important to be in all three: website, app, aggregator platform, and embedded.
So I'll just add, investment advisory also has a lot of room to grow.
Just to clarify, Mainak, the number that you quoted are for general insurance, or this is not life, right? This is not life.
This is only general insurance penetration.
Penetration. This is not life. Okay.
1%.
1%. Right. So coming back to you, Aniket, in terms of as an individual, right, as someone who's in the market, right, I'm a very small player, right? So, and as I said, you have been wearing the cap of the regulator. So, how do you think this data helps in effective policy making and regulation supervision? And what are some of the things I should be confident about that? Yes, the way my regulators / the guys who are supposed to do the supervision are doing their job. How do I get that confidence?
Yeah. So I think I'll answer the first question first as to how data is increasingly used in policy making. So if you see now, at least since the last 3-4 years, all the regulatory changes are highly consultative. So even those who are interested in financial markets can look at SEBI consultation papers. So all major regulation changes are coming in the form of consultation papers, which people can read, people can provide their feedback on, and then the regulation gets implemented. And even more interestingly, all these proposals are also this is also a evidence-based policy making. So every paper that you will see will have lots of data backing it. I think Neelesh also mentioned about the dark patterns paper that similarly even SEBI papers, if one sees, there's a lot of evidence, data-based evidence that comes into each regulation. Other than having framed the policy, once again, there are policy impact assessments done to see whether these policies that were put in place have actually achieved the results that they were targeted to achieve or not. Coming to the point on investor protection, see, data can be used in multiple ways and is used in multiple ways. Firstly, the data that we publish to investors, that can be both market data as well as individual data. And secondly, the data that we use ourselves to make sure, to prevent market abuse. So, I think we are the largest market in the world. So this is established that we are the largest market in the world in terms of number of transactions and number of investors. So we have huge data, and the amount of disclosures that Indian exchanges give on public domain, that's far more than any other exchange in the world. And if you go to exchange websites, I'll not stop talking about now if I start talking about what we publish. So this definitely helps. Other than the data that we publish, we are all there is also research reports coming up. So interestingly, there was some talk about influencers. So there was a very famous SEBI report a year ago on saying that 90% people lose money in derivatives, and now
I get that every time I log in.
yeah. So now for the qualified brokers, it's like the message on cigarettes. When you log in, if you trade derivatives, you're going to lose money. They actually and another interesting part. So they had a similar report on cash market also. And again, to coming back to your point on correlation not being causation, there was one headline and there was one flash on one business TV news saying that shadishuda traders ज़्यादा कमाते हैं.
Yes, I remember that.
So, yeah, I omitted variable bias. So look, they are used to being wrong. So that's okay. So, but this is the public disclosure, right? Other than that, there is a lot of individual level disclosure that exchanges give directly. So when you trade, you get the exact price and the exact data directly from the exchange, which one can cross-check, verify with the contract note. You can log into exchange website and verify your trade details based on the broker. All of us are also used to holding statements from the depositories, NSDL, CDSL, send consolidated account statements. So if there were instances in the past of client securities being misused, they all will be much more monitored because so much data is going directly to investors. So even we as a clearinghouse, we collect 60 plus data points as to where the customer money and securities are lying. So if you transfer any funds to the broker, it may be with the broker or the clearing member or somewhere else. The cash may be converted into a fixed deposit by the broker and so on and so forth. There are 60 plus data points that we capture, and actually we give them out to the investors. So one could log into our website and see where is the money that I transferred to my broker actually is. So this is the data that we give out, both public data and investor level data. Other than this, there is a lot of internal surveillance that exchanges and SEBI does. So that includes real-time surveillance. There are so many orders every day come on insider trading and front-running cases, etc. And that again, that's nothing short of no detective series if you lead those orders. So they are really data-intensive orders. So we monitor social media, we monitor everything. So if our surveillance is not just the price and volume data, but we monitor other things like what's happening in social media and so on. SEBI has more power. SEBI has more access. SEBI has search and seizure powers also. So they have access to even greater data than we do. But yes, so all these other kind of internal surveillance mechanisms is what we have in place to ensure that market abuse doesn't happen and price discovery happens in a fair and efficient manner.
So as Neelesh had mentioned, everything is based on trust. So as investors, we believe that everything is working fine in the market until something blows up, right? So on that note, we will open the forum for any questions if there are any. So maybe, okay. The mic needs to be passed on there, right?
Sir, whenever we discuss about the finance or...
Just a minute, I think there'll be...
So whenever we discuss about any financial institution or bank, the regulation is very important part of it. But when we sit in the boardroom or decision making, when at that certain level of decision making authority level, we talk about regulation, compliance and everything. But when we are selling our products in the market, the team which actually talk to the customer, they sometimes forget just to make sure the targets are met. They are under tremendous pressure to sell the products. In order to make, to meet the target, they sometimes
missell the product.
They missell the product. That sometimes bypass the regulation and compliance related issue. how at the decision making level, how we are like taking on with this challenge. Are we equipped enough to take on such challenges?
Can you identify yourself, and is this question routed to any particular panel member?
My name is Pratik Agarwal. The question arises out of the first session, the keynote panel.
So it is more to Neelesh.
Yeah.
I was actually about to route it to him.
Yeah. So I would want him to answer this.
Okay. The questions are more for the panel, but fine, we'll.
Sorry. No, so earlier it was, like I said, it was more the cost of doing business. Missell, a slight reprimand, and that's about it. Get on with life. In fact, the underground pattern was there's no issue. Please go ahead, Missell. It's okay. जितना चिपका सकते हो चिपकाओ, ठीक है ना? So gone are the days. At least I can talk for Bajaj Finance Limited. I think we've sacked more agents or more of our DSAs selling products for mis-selling rather than anything else. We have a very stringent penalty staircase for all our DSAs companies. In terms of if we come to know, we cut their commissions, we cut their penalties, 1 warning, 2 warnings, out of business kind of a situation. The same goes for the managers handling those sales agents. And yes, and we've seen great results, and we publish the data to the regulator also when they come in of what actions we've taken, because like I said, now mis-selling, suitability and appropriateness of products, does the client need that product? Again, alluding to a dark pattern. Did you sell him, like for example, an embedded insurance? Earlier, I mean, again, what companies used to do, they were auto ticks. Now also a lot of companies do auto ticks. So you buy a TV, you will get an extended warranty which is pre-ticked. You won't come to know. Nowadays also, if you go to IRCTC, it comes as do you want insurance? They all used to come pre-ticked. Now it's very clear, RBI is getting into it and regulators are getting into it. They want an explicit opt-in, not an opt-out. So you all also as consumers, even I didn't know. यार आगे चलते रहो 15 रुपया 10 रुपया 11 रुपया क्या फर्क पड़ता है? But imagine crores of people doing that. Short of, this is like modern dacoity here, to be very honest. So all of this is coming to the forefront. So to answer your question, gone are the days. I think it's sooner or later the companies will have to shape up. Mis-selling is out.
I want to add something as well, but after you, please.
Yeah. So, being an insurance or bank, we are dealing with intangible transactions. When a person is taking an insurance, he's paying us money and we are just giving a piece of paper. Now, what I'm selling it as, the mis-selling word that you're saying, it also has to do with how the culture of the company is. If your salespeople feel that it is okay to mis-sell, and if the complaint goes to my boss, I will be just let aside. That's one way of working. But as a culture, if you are ethical, if you have integrity, if you think about the customers first, and I think, as a responsibility, then as an organization, you will not mis-sell. There could be 1 or 2 stray events, and then once that event happens, you make an example of that event, nobody will do it. I have been in Bajaj Allianz for 18 years. Like all of you, I joined as a management trainee and I've stuck on. And we were only selling promises, right? We are taking premium and giving a piece of paper. If I can't keep my promises, then I cannot be here where I am for many years. So, one, the company, the culture, the ethics, and at the end of the day, if you find out a problem, you take strict action and make an example out of it.
Yeah. So I'll be quick. We are running out of time, so I'll be very quick in terms of my 2 bits on this. So I was in global fintech for last 3 days. Met this guy called Finance with Sharan. Sharan, how many of you know what I'm talking about?
Sharan Hegde.
Sharan Hegde, right? So I'm a huge fan of his. Basically, good content. These guys are slightly on the responsible side of content curation. So one of the things that I actually requested Sharon to actually lobby and make content and make regulators rely on how much mis-selling is happening when the customer is walking into a bank branch or anything else. Now one of the things which top management will always sort of imply is to have recorded conversations with customers. So that's at the time of deal closures. The way selling is done, unfortunately for insurance, I have to say this, it's actually all the insurance selling is done on returns of the products, financial products, and this is what we have gone to regulators and said that you need to get it stopped completely, because insurance is actually not sold as insurance. Insurance is actually sold as a financial product which will make great returns and everything. And that's the lobbying that we need, and we are getting into that as well without naming any particular firm in that order or so. So as where you are in your career, let's say, and that's where it's very important, and that's why I just pulled the mic quickly for that. See, you are at a crossroads of, what career decisions you'll make. Tomorrow you'll make big decisions for organizations, whether to be ethically compromised. Chalta hai. There will always be new sort of, fraudsters, new sort of, thing, people coming in. I started my career, when this Enron thing was in play, before Enron CVs were in market, Arthur Henderson guys were looking for a job because they knew that they're going to get wiped out totally from the market. So that was the era that I saw. Those guys got wiped out, newer sort of characters came in, and newer sort of ecosystem got built around that. But where you guys are right now, that's the decision that you're going to make. If you get into an organization tomorrow which is doing anything of it, I'll suggest just leave it immediately to get started. Just leave it first. The responsibility is on you guys. You're very qualified. You'll be trained by the best of the best, and it's up to you. And that's where the institute is also preparing you for that. But again, lot needs to be done from where we are currently. Yeah.
Thank you.
Hi, good afternoon. And well, first of all, thank you so much for the informative session. So I have two questions. First would sound like a journalist directed towards Nikhil. So there are recent rumors that RBI wants to regulate and limit the market share of a UPI to 30%, or for a UPI player to 30%. And seeing that my bank account is with HDFC, so the land is owned by HDFC, and my insurance is with Bajaj. So again, the insurance is owned by Bajaj. So you are kind of the aggregator and the player who plays upon that. So how do you, as a company, go forward and think about what could have been done if the market share gets capped forcefully by the RBI?
So just to get your question right, you're saying what should we as an organization do if we get capped? To what end though?
The basic idea is that the land is owned by someone else and you are kind of farming on that. So how do you sustain this in the longer term? What if HDFC tomorrow comes into this game and says, I'll do the UPI itself, which they're doing. So how do you look in the longer term, and which Bajaj is also doing, that we'll sell the insurances. So how do you look at that?
Sure. So again, personally, so when UPI came out as a construct, right? I think there was never a doubt, from what I understand, that in the ecosystem that the store of value of funds will always be the bank, right? The core idea of UPI was supposed to be faster, seamless movement of funds, and make it easier as compared to the NEFTs, IMPS, etc., where you had to remember the bank account, etc., plus securing that information as well, right? Because that got abstracted as a UPI ID, which doesn't expose your bank account, right? In that sense. So I think different players had very different roles in that ecosystem to play. The banks primarily store of funds. They could choose to come and serve, the way I would call it personally, the millennials, Gen Zs, and now Gen As who are coming in. They were encouraged, and they obviously had an open field to come and explore that space as well if they wanted to directly go into that space, right? And then there were new age organizations, PhonePe, GPay, ATMs of the world, etc., who thrive on providing fintech value-added services in a very customer-centric, easy manner, right? And they, I think, focused primarily on that aspect. And I think they continue to do that as well. The players that still exist in the ecosystem, they continue to do that. So the banks are still welcome to explore that particular area. My personal view is I don't think that's the strength of the bank. I don't think they are not built, but I don't think that's their forte to think, from a Gen A, Gen Z, how they will be using financial services, make it easier for them. And I think that's where new age companies step up and take that little space that gets created and lap up opportunities like this, right? And UPI is just a case in point. There are multiple such opportunities as well in investments, insurance, etc. Right? So I think the ecosystem players are there to stay. I don't think that's a challenge. I don't think there's an existential crisis in terms of identity, as I understand your question is. And I think the ecosystem will continue to thrive as the economy grows. I think somebody called out 5 trillion, third largest economy is the goal. And I think we're well on our way as a country to go towards that. So I think every individual, every ecosystem player will continue to thrive in their own identities.
Second question, can I go? So to the recent GFF that was going on in Mumbai, so Mr. Nandan talked about Finternet. And I was recently going through the white paper of Internet. What he wants to do and what I could understand was to tokenize the tangible and intangible assets and make it go around in an easy and accessible manner. So is there a world where I am taking loan from PhonePe, then investing in the stock exchange with the advice of Tavaga, and where my CIBIL score is already with you all, and insuring that asset? Is that a far distant vision, or is it possible in the near run? What do you think? This is open to all.
Actually, I would believe it's possible. That's my take, but I'm a academician. So, as a faculty, I think it's possible. In theory, it's possible.
I'll just start. I was just going to start off the conversation and say that PhonePe is a distributor of loans, not an NBFC, etc. I think I'll let Ashish take over.
What you're talking about is the concept of color of money. Okay, everything can be done by tokenizing. And when you do a color of money, it's when I transfer the money to him and he transfer the money to him, and I give 100 and he give 50 and he transfer 5 to you. It is which of the 5 from me or him has come. And that happens by tokenization. And that's the concept or underlying principle on CBDC. So it is still a little leapfrog, and for the tech guys to make some more money by the banks and insurance so that they can implement that. But it is not, and yes, there are other norms that can be done to, if you don't want to do it. For example, if the money you're taking a loan and it goes into your liability account, the CIBIL guys will know that the money has come from a liability account. And if you're buying an asset on that and then you're insuring it, then your account aggregator in turn alerts that out. So if you look at the jigsaw puzzle, you can actually do that even today. Inability to score is the reason why it is not done, or inability to access data. It is not that it is not possible, right? So yeah, you take more analytic scores and then you will carry.
Yeah, so I think just quickly on this, no, it's not a distant dream. Be prepared to be disrupted, and when I started my career, regulators, used to meet RBI from ICICI Bank and everything. The biggest example was how is it happening in other countries? US kaise kar raha hai? Now we leapfrog that completely, So be prepared to be disrupted in whatever way we are thinking. And if you're looking at your career choices, anything is possible. Never say never.
Thank you so much.
All right, thank you so much. We'll not be able to take more questions because as every conclave goes by, we have a lot of knowledge to talk about, a lot of things to talk about, but we're always short on time. Thank you so much. Thank you so much to all of you for allowing us this pleasure to witness this amazing, interesting interaction, an intriguing discussion which was enthralling for the cohort, and this has enabled us to become better managers, better leaders for tomorrow. I want to thank our moderator for being thorough and being able to extract multitude of knowledge. The idea of data being the new oil was one of the finest analogy that there is. The idea of 3 different themes has enabled us to absorb the talk in a more structured manner. I was scribbling some notes, so here are a few takeaways from the discussion. Mr. Mainak Banerjee talked about opened the conversation by catching the theme on importance of data. He talked about how insurance industry use data and how insurance industry is shifting from historical data to more personalized real-time data, and how the data can be used to do STP, segmentation, targeting, and positioning, which brings down the risk. Mr. Aniket Bhanu talked about risks, which is extremely important when we talk of finance, and how relying on an umbrella data model will lead to a faster version of a 2008 global financial crisis or black swan events. He made a strong case for model validation, not just blindly riding the data bus. Mr. Aditya Khandekar talked on the need of data streamlining across populations, across thousands of branches, the difficulty that lies in the process. And when you said that banks wants to keep the underwriting boring, coming from a public sector bank, I haven't heard anything that is more relatable. An important point on how smaller firms are slightly on higher risks and how they may use the data to do a prior check before launching a product. Mr. Nitin Mathur, he underlined his company laying extreme importance on goals of clients. He talked about the gaps between the haves and the have-nots. The served is getting overserved and the underserved is neglected, and the need of shifting the focus. And the challenge, he also talked about the challenge about what the goals of the clients are, which reverberated amongst a certain MBAs who are here at SPJMR to find their calling. Mr. Nikhil Ratanpal talked on how certain sections of society don't have access to formal financial service industry and how data and new age players may bring them under the financial footprint, importance of transparency and disclosure. So in this whole discussion, we saw an underlying path to follow that we, the future leaders, should also ponder upon how we can use our skills we acquire at SPJMR to include the left alone sections of the society. I want to thank our keynote speaker, our panelist, our moderator for gracing us by their presence. Proceeding to the last stage, I would like to request Nikita and Manoj to present the token of gratitude to our guests on stage. Maybe have a round of applause. I would request our keynote speaker, Mr. Neelesh Sarda, to join us on stage to receive the token of gratitude. And I would request Nikita to present the token to Mr. Neelesh. Now, I would want to request Professor Ashish Desai to join us on stage to receive the token of gratitude. Your help has made this conclave a success. Without your support, we would not have this interesting, this engaging discussion. A louder clap, please. I would request Manoj to present the token to the professor. I would request the panelist, Mr. Ashish sir, and the moderator to join for the photograph. Sir, I request the faculties to join the stage for the photograph. The program level team we have. A huge round of applause for the program level team. Anshul sir and Amol sir. Then I'll request the conclave to be ready. I'll request the conclave team to join for the photograph. So by the time, I'll request the Samavesh team to be on standby for the photograph. Okay. Thank you so much. I also want to thank the management, the program level team, Anshul sir, Amol sir, and Deepthi ma'am for her constant leadership. The Samavesh team, especially the people who are working behind the curtains, the logistics team. And in the last, the team that don't get thanked enough, the audience. Thank you so much. This is Shuman Gupta signing off Finance Conclave, Samavesh 2024. Thank you so much.